What is going on, everyone? Welcome to another video. This one is going to be a trade breakdown. I will break down four of my trades, break even. Two of them are winners, and one trade I didn't took because the price section didn't provide that continuation order block. So I will be going over all of them. So on the right side, I have the YM daily chart, and on the left side, I have the NQ daily chart. I'm using YM for the high time frame SMT divergences. So here we are taking this range low on the YM here, and on the NQ we are creating that bullish SMT divergence. So this means that the NQ will be the leading asset and going higher. So this was our idea from the daily chart going into the 4 hour, and this is the kind of protocol I'm using. This is the flow chart. I will be going over this in the next video. First I have to start with the daily bias. Is it clear? If no, then there will be no trade, because if you don't have a daily bias, then you shouldn't be dropping down to the lower time frames. If I have a bias, then I should go to the 4 hour chart. Starting the new week on Sunday 18, we created the low of the day first, creating that SMT divergence. I will skip it into the new work session, and let's open the flow chart. So the next step is the daily profile clear? So for that, we have to go to the 1 hour time frame. If it isn't clear, it is a seek and destroy or consolidation, then we shouldn't be trading. If it is clear, then we are waiting for that swing point in the new work session, especially around the drivers. Now going into the 1 hour time frame, you can see that we created the low of the day and the London session. This is a change in the state of delivery, confirming the intraday reversal with SMT divergence. At this stage, we already had that SMT with the yes, he is taking this low, and the NQ is creating that SMT divergence. So this was another confirmation for the intraday reversal. Now going into the new session, after an expansion, we need to see another further price delivery, which would be that retracement. So what we did on the 930, we manipulated lower this low and also tapped into this fair value gap, creating that swing point. Is there a swing point at point of interest? If there is, then you should be trading. If no, then no trade. Now we are preparing for the entries. Is the reversal candle aligned with SMT divergence, time, and strong confluence? If yes, then you should trade this candle 2, because the driver would expand away. If not, then you should wait for that candle 3. Now since we have a very large reversal candle, so we wouldn't be trading this. We will wait for that continuation entry. So dropping down to the 5-minute chart. Now here we have that reversal candle aligned with the SMT divergence with the ES, and it is like 9:30 a key time. But if you look at the size of this order block, we wouldn't be trading like this and putting our stop loss about 100 points. So we would wait for that continuation order block. Now at this stage, we already have the change in state of delivery on the yes, but I'm trading the NQ anyways, since we have the change in state of delivery within the 945 candle, and the NQ is a little bit lagging asset. I should enter on this candle. My stop loss below this low, and I was targeting this high right there. But when the NQ traded into this high, I put my stop loss to break even to de-risk myself and let the trade play out. But unfortunately, the price retraced and took me at the break even, and then continued in my direction. And now we will go over the gold trade, which I took on Monday too. I am in the gold daily chart. On the left side we have the gold, and on the right side we have the silver daily chart. So on the previous week, we expanded continuous 3 days of expansion, reaching into a key level. What would we expect? Another further price delivery, probably a retracement, a reversal, or consolidation. But since we took the previous day high in the Asian session and we had a small wick, so I was expecting a reversal lower for this specific day or the Monday. So dropping down to the 4 hour. Now the second step is going into the 4 hour chart. Is the daily profile aligned? If yes, then what pair of price delivery we are in. The goal is creating that bearish SMT divergence. So this means the gold is the weaker asset and the silver is the stronger. So we would be trading the gold. So this was my idea, and we already had that 6 a.m. reversal, the New York reversal profile, and we will confirm that more on the 1 hour time frame. Now going into the New York session, I traded this on the 10 a.m. We have that New York reversal on the silver. We have created that order block, change in state of delivery, and same thing on the gold. But here is the thing, we created that bullish SMT divergence again on the gold, which led the gold to be a stronger asset and the silver to be the weaker. But anyways, I'm trading the gold. So I waited for that new candle, the 10 a.m. And since we are in continuous expansion, so I drop down to the 30-minute chart for that swing point formation. Here on the 30-minute chart, you can see the 930 created that swing point inside this fair value gap. And if we open the flow chart, do we have a swing point in new position inside a point of interest? Yes, prepare for the entries. Is the reversal candle aligned with SMT divergence, strong confluence? Yes, we have SMT divergence, but since it was a 30-minute time frame and we would be trading the new candle, which is the 10M continuation. I waited for that. So dropping down to the 3-minute chart, this is the initial change in the state of delivery within the candle 2. Now we have to wait for that opposing run within less time to then expand lower. Now we are 12 minutes into the candle and we have created that continuation order block inside this volume imbalance, and we close below the consecutive series of close candles, which is that order block. So I enter on the next candle, my stop loss above that high, and I targeted 2R, and the price expanded lower, completing our 2R target. So this was the second trade on Monday, which was also a winner. It followed all of our rules from the flow chart. Now for the third trade, so starting with the daily chart, we created SMT divergence at this range low with the ES. ES had that midweek reversal profile. Monday and Tuesday kind of consolidated, and then Wednesday created the low of the day. This is the one shot, one kill approach, and maybe I will make a video about this in the future. So we had that SMT divergence at that range low or this candle. So this means the NQ will be the leading asset, and using the MMXM's next day model or the T-Trace fractal model, we had the Wednesday reversal. So the Thursday will be expansion or a continuation higher or an open low high close candle. The daily bias is clear, dropping down to the 4-hour chart and checking the daily profile. Now on the 4-hour chart, you can see from the 18 open, we created the low of the day inside the 22 candle, and we had that New Year continuation because the 6M NL created its low inside the fair value gap. But the protocol behind that was from the weekly open, we created the low of the week and then expanded higher. Again, we created SMT divergence as the Wednesday low, and the yes, we have taken that. So it means the weekly manipulation is over, and now we will be expanding higher. This is the change in the straight up delivery intra-week, and I was aiming for this high. So for this approach, I didn't use the 1-hour chart because the price section is nowadays a bit messy, and the 5-minute chart can manipulate you. So I used the 4-hour to 15-minute time frame alignment, and we had this 6M reversal. So we were expecting the 10M continuation higher to this high. So dropping down to the 15-minute chart. Here on the 15-minute chart, you can see we have SMT divergence at the daily low with the NQ. NQ is not taking this low, and the ES is taking that, which is creating that SMT divergence. Reversal inside the 22 candle, then expansion. Now we would expect a new feather price delivery going into the newer session. What is that feather price delivery? A retracement or a consolidation. Then we have to wait for that key time, which is the 930. We manipulated lower, and now we have closed above the consecutive series of down close candle, confirming the change in the state of delivery since we were near the 10M open. So I executed here on the next candle, my stop loss below here, below the 50%, and I targeted 2R. Since this entry was aligned with the 930, I traded the reversal candle because on the 15-minute chart, if you're waiting for that continuation order blocks, then the daily expansion will be over. So you can trade that reversal candle and expecting the 10M to be continuation higher. And another reason for this trade was the YM. If we go to the YM chart, on the YM we expanded prematurely on the 930, and now we are tend to consolidate or retrace since when the NQ is stronger, the YM will be weaker, and when the YM is weaker, the NQ will be the stronger asset, and the ES lies in between. So it was retracing lower, so I was expecting the NQ to reach to these highs. So this was my entry, and the price expanded higher, completing our 2-hour objective. The beauty about the one shot one kill entries is the risk to reward ratio will be less compared to the 5-minute chart, but overall you will be having a less chance of manipulation. So this was the one shot one kill protocol. Starting with the daily chart on the goal, we are following that same pattern of the MMXM next day model from the weekly open, which was right here. We protracted down, created the low of the week from a next day model or the candle 2 closure. So we were expecting the Friday to expand higher. So this was the idea going into the daily chart. Now using the flow chart, now we will be going into the 4-hour and check for the daily profile and the feather price delivery. On the 4-hour chart, you can clearly see that we had the change in the straight up delivery on the silver, creating the low of the week, and now we are expanding higher. And the signature for the continuation higher is this fair value gap. So from the daily open, we protracted down, created the wick up the daily candle inside this 4-hour fair value gap, and now we will be going higher. So going into the 1-hour time frame, on the 1-hour time frame, you can see from the daily open we are protracting down inside that fair value gap, and now we are expanding higher, changing the state of delivery and doing that intraday reversal. It isn't clear on the 1-hour chart, and I was aiming for the one shot 1 kill entry, so I would drop down to the 15-minute chart. On the 15-minute chart, you can see we had a nice London reversal, Asian consolidation, London taking Asian lows, and then changing the state of delivery, consecutive series of down close candles, followed by closure above. And since we are displacing from this reversal point, we would aim for that continuation order block because we cannot enter at this candle. So I waited for that continuation order block and wanted to enter prior to the negotiation. But going into the session, we were in a consolidation. We haven't taken this low. And on the silver, we also haven't taken this low, so this doesn't seem to be a good price action, and the price didn't want it to expand higher because when the price is expanding, it will be having a shallow retracement followed by large expansions. So it was consolidation, expansion, then a consolidation, not a clear change in the straight up delivery, not within the time, and then the price expanded, but on the silver it stayed between the range high and the range low. The price action wasn't clear on the 15-minute chart, and the 5-minute chart were even worse. And this was a sacrifice for choosing the clear price action and high probability entries or the lower probability entries. So these were my trade breakdowns. Hope you guys have learned something from this. And I will be dropping a remastered version of my model with a flowchart. Thank you guys for watching. Make sure to subscribe to the channel and like the video, and see you in the next one.